Meantime, let's bring in our market panel. Joining us now is Sam Stovall of CFRA and Scott Wren of Wells Fargo. Sam, I'll start with you because you recently put out your 2024 price target for the S&P 500, and it tickled me a little bit because you talked about the fact that we may test 5,000 next year, but that might be tricky. There might be resistance there. So 49.40 is what you're going with. Break it down.
That's right, Morgan. Mark Arbiter, the technician over at S&P when I worked there, used to say that round, large numbers act like rusty doors and require several attempts before finally swinging open. So I think that could be the case that we see in 2024 with the S&P 500 around 5,000. That said, basically, I looked at three things when coming up with my target price. I looked at fundamentals. I looked at the target prices for the stocks within the S&P 500 set by CFRA equity analysts. I market cap weight those to get a fundamental target price. I look at point and figure on these stocks to come up with a technical target price. And then I also looked at history, the period after the Fed has stopped raising rates. We're in year two of the bull market. Also looking at the election year of first-term presidents, which, by the way, have never declined since World War II. And that's what helped me to get to that number.
Yeah, the election year piece of it's particularly interesting. Bespoke pointed that out just this morning, the fact that we seem to be on pace for that trend. Scott, you've come on. You've been more, I'll call it cautious. You've made the argument that there's more downside risk to stocks. Do you still see it that way headed into 2024? And given the fact that you've been telling clients and investors to put a certain amount of money, part cash and short-term fixed income, at what point does that shift?
Yeah, Morgan, I tell you, we are still cautious, and we don't want to chase this rally. We'd rather fade it. And really, when you look at the Beige Book last week, I think the Fed pointed out just exactly the things that have been concerning us. And as I look at my list, consumers are pulling back. They're more price sensitive. The labor market's easing. Credit's tougher to get. Delinquencies are rising. Corporate pricing power is waning. So, those are the things that we've been concerned about for a while. They've taken a little bit longer to probably play out than we initially thought. But we're still in the camp that we're at the upper end of the range here. This 45.80 to 46.30 is some pretty good resistance. Obviously, we're going to test 46.30. We're right there. But we don't think we're going to see that carry much above that. And some of these issues that we see as headwinds are going to have negative impact in the market as we move into 2024.
Okay, watching that. We're also watching Oracle results are out. We're going through them. The stock's initial move is down by a little more than 5, maybe 6%. We'll see what the numbers say. Sam, back to you and your S&P views, 49.40 or fight, I guess, for next year for the Oregon folks out there. But in the nearer term, with CPI coming up, what would it take for the CPI print, you think, to shake us out of this comfortable spot the S&P's found over the last week or so, around 4,600?
Well, a good point, John. I think the reason that the market just continues to work its way higher, even the day before CPI, 2 days before PPI and the Fed meeting, is because they really expect these items to be non-events, that there's not likely to be a surprise to unfold. Unfortunately, sometimes in the near term, that could serve as a bit of a shock and a reawakening. But when we look at the CPI components, our expectations are for an equal to or lower reading from the month before, particularly looking at the year-on-year core percent change. So that is still in a downward stair-step fashion. Our expectation will probably hit the low 2% area by fourth quarter of 2024 from the PCE perspective. So really only if we end up getting some sort of an upward hiccup in either of those two numbers, I think will jar investor confidence.